Hello, this is Martin from seekedge, the channel for learning about trading and investing. Welcome to the Markets Tomorrow, the daily technical analysis show for July 13, 2021. So every day, every market day, we analyze in this show what happened during the day and try to learn and understand and then plan according to the trade for the next day. That's what we do here. So let's get to see all of these parameters that is listed down here and know them from the charts and the data that we have. So let's remove and get into the plain charts of Nifty 50 is what you see here. So look at that candle. It's such a bearish candle, right? Such a wide range bearish candle after a Friday doji of indecision, right? Look at what happened today. It cheated everyone, right? The bulls trapped the bears. So this is a perfect bull trap that happened. The market shot up and then went down just like anything and then later recovered a little bit. That's what happened, right? It ended up flat with just 3 points up nearly. Look at Bank Nifty. It's a spinning top formation. Again another bull trap, right? So it went above the previous candle high and everyone went long and then trapped everyone and then finally moved up back, recovered few points and settled. This is the price action. Let's see in lower time frames what exactly happened. Look at this. This is where the market started, right? And it was a up move of nearly, right, some around near to 100 points, and then it was a down. It was hovering around that for some time, right? There was consolidation that is happening, and look at that candle at 1 o'clock, right? Just that single candle is how many points? If you see, right, it is 75 points. A single 15-minute candle is 75 points in Bank Nifty, and it fall down somewhere around 120-30 points from the top. If you see, it's 140 points. So it shot up 100 points and then gave up 140 points. Such a drastic day. Look at what's Bank Nifty. The same action, consolidation, 1 o'clock, and what is that candle? Let's see the size of the candle. It is somewhere close to 320 points down after a climb of nearly, suppose we take this as the close, you can say it shot up some 250 points and then lost, right, more than that, much more than that. So that was the gap up, consolidation, then breakdown, right? So the only way, so this is tough for, this must have been tough for everyone, like the buyers, sellers, everyone. So buyers would have been waiting to, since it is above the previous day's close, they might have been waiting for the breakout to happen on the upside and it happened on the downside. Sellers also similarly was sold the put options and waiting for the market to move up. If the direction option sellers, they got cheated. If they were waiting for the consolidation to continue the full day, right, option sellers were waiting for theta decay to happen the full day, no, and expected only small move, not a trending move, got the worst of the trending down move and got stopped out. There were Bank Nifty freezes that happened for traders a lot, right? So such a day. Now that single candle, look at that move, Now Bank Nifty is what we were saying. It's the same, right? We are seeing the same, right? So that's big move, that 1 o'clock big drop, surprise element, so that is how markets behave, right? So when nobody expects it, it gives surprises, right, to both buyers, sellers, whichever strategy, whatever you're prepared for, right? So this is the action today, right? Now, um, so price action, we know. Now there are certain things like that we can see here is that it did not do anything today. Nifty has taken the same support zone of 15,600, 650. That same support zone it came, halted, and then bounced back a little bit. Recovered some of the losses. Similarly, it got hit in the same zone of 15,760, 780, 70, 80, that levels. That's exactly where it had got resistance multiple times. Look at here on 17th July, same point. Look at this one, this one, right? So this is a 1, 2, 3, 4, 5 times it has got rested at the same place. Now the day before resistance was also the place where 6, 7 times it is resisted, right? So there is clear consolidation, clear resistance, and the market is such narrow bound that, right? Look at the Bollinger Bands in the Nifty. It's squeezed and contracting to almost very narrow. So we have been hovering around between 6 in 200 points, like between 600 15,600 and 15,800, 850, 200, 250 points is what we have been hovering around for quite some time since. And if you see, it is since 2-3 weeks. This is what is happening. So since June end, we have been. This is what was happening. You will move 100 points, 150, 200, and so that is the consolidation. But one thing that we have to keep in mind is today also in the lower 5 minutes time frame. If you see that this breakout could have been caught. If you see that 5 minute, right? So we can clearly see the skews of the Bollinger Bands here. So the only problem is we don't know whether it is going to break out or break down. Today it broke down, sometimes it could be up. So whenever you see this kind of consolidations, it is sure that it's going to break out. But the extent of that fall may not be as how it happened this much, but it gives some indication for you to get out of the trade whenever it is squeezing for a long time. Now this is exactly the issue at the daily time frame. If you look at that, a similar consolidation is happening since several days on the daily time frame. So this cannot continue like this forever. Somewhere it has to break out, right? It normally does not continue. So that is the indication that the Bollinger Band shows. It will break out either side, upwards or downwards. We don't know that, right? Because sometimes it goes up, hits the resistance, comes down, take the support, bounce back, and then so this continues, but it cannot continue for long, right? It has been quite some time, so it can break out at any of the side anytime. That's what bond support resistance. Absolutely nothing has changed. 15,600 and 15,800 and 900 range. So the two resistances that the support and the resistance that you can see. No, it is not even going below to the 15,450 levels or 15,000 levels. Similarly, Bank Nifty, you can clearly see that it is today also it had taken the support of a channel which has been there since since April, right? Nifty also it has taken the channel support that is there since April. So the trend line channel that you can see, it is coming and halting on that and then bouncing back. So the channel support continues to be there in both the indices. And Bank Nifty support levels, it exactly it has taken the channel support. It has not even gone down. Bank Nifty, if you see, it's little more bullish than the Nifty. So resistance supports levels 35,800. Resistance remains there. Similarly, 34,600 support also remains there. There's been no changes there on that side. Now, what do we see? Momentum. right? So once the support resistances and the candlestick patterns of the price action is studied, we'll go to the indicators. So the momentum of the Nifty, if you see, is showing that it has further lost the momentum, right, in the sideways zone. Bank Nifty also further lost the momentum, but it has taken a bend, indicating that it's more bullish. It's not falling, it's rising at least. So it's more bullish than Nifty, if we say. Now there are no divergences that is seen because momentum is in the sideways. So there's no divergence that is seen. And if you look at the trend indicator Radix for the Bank Nifty, you can see that today it just so this is 12th, this is 9th. So 9th it crossed over to the bearish territory, and today it crossed over to the bullish territory. So actually there is a shift of the trend that happened today. Now surprisingly it is from a bearish to a bullish in the case of Bank Nifty. It remains to be in the bearish zone if you look at the ADX trend indicator, right? The strength is not there, so crossover is going to happen and the bullishness is going to come. Bank Nifty also the strength is less, so whatever bullishness is there is may not sustain. That's what it indicates. Anyway, the crossover has happened, that much you know. That's about momentum and trend. That's about the data that we have from the charts. Now let's get into and see what about open interest of the derivatives, option data and the futures data. So futures data for Nifty is showing that it is a long unwinding. That means it is slightly bearish. It means people have gone long or unwinding and going short instead. So similarly, the Bank Nifty, if you see, you can see that it is a short covering. It's opposite. It's slightly bullish. People who are short are covering and going long. So Bank Nifty in this here also it shows that it is slightly more bullish. Now in the open interest data, if you see, what do you see here? PCR has dropped to bearish zones 0.56 further down. So Nifty has turned more bearish. PCR for Bank Nifty is 0.65, which is again gone, is bearish but not as bearish as Nifty. Now Nifty, if you see, the open interest data shows that it is an overall bearish. Highest resistance is call rating is happening at 15,800. Below that it is 15,700. Right? The supports, hardly any supports. Highest is at 15,700, and after that you have 15,000 and 15,600, 500 range. So these are all very not much for the next expiry of 15th June. So no clear big supports are seen, right? The contracts that are open, right, don't have too much, but heavy resistance at the same time can be seen. Bank Nifty, if you see, there is good support at 35,000 continues to be there. So overall, if you see, it's neither bullish nor bearish, right? 36,000 and 35,000 is the range. In between, we have a 35,500 also, right? So it has got good support. 35,000 is not may not break. So this expiry may be between 35 and 36 in our novel. It is 35 and 35,500 probably, right? Because only hardly 2 days left. So that is what open interest data on options is saying. Futures we already seen. It's long unwinding for Nifty and short covering for Bank Nifty. So that's open interest data. Volatility had shot up today. India VIX, if you see, it's forming a doji. But if you look at what happened intraday on the 5 minutes, you can see that it had shot up and then the volatility shot up in the morning. No, it dropped, right? It dropped and then shot up and then settled. So and settled around 13. So it went down as low as 12.5 that levels and then shot up. So the volatility continues to be. So if you look at the percentage wise, that volatility is big, right? If you look at today's data, percentage wise, if you see, it's making 6% down move. So volatility is dropping 6%, and right, then rising, right, 10%. That's the kind of volatility that we saw today. But imagine that this is all happening at a overall range of the volatility. If you say, it is still at the bottom, right? So in the bottom only all these things are happening. See, right? We are in a historic fall in the volatility, right? From a this is a big, right, 50-60% of down move, 58-60% of fall is what has happened, and in between it is making this kind of movements intraday. That is what makes the market jittery, right? So it's very difficult to trade in such volatility regime. Now let's look at what happened to the foreign institutions data in the cash market. So what do we see here, right? Today also Fyers have sold. So that's 3 days continuous, and the entire previous 2 or 3 weeks, 2 weeks is the it has been selling from Fyers. DAS resumed the buying. They had halted it 2 days back. Thursday they had sold heavily on 1,000 crores nearly. Thank God they have bought little and then saved us from the crash once again, right? So sectors, if you see the heat map of what happened today, today I know which sectors performed, right? So finance services, FMCG, auto, and that's all. IT, pharma, metals are not doing good, right? So the movement happened from the banking side, right? So anyway, ICICI Bank was only, and SBI index. HDFC was not there to support the market today, right? And FMCG, Tata Consumer was performing today, and automobile, it was none of the major players were performing here, right? Let's look at the chart quickly on the indexes of right? So here one thing is, this is the Nifty IT, information technology. Sorry. So if you look at this charts of the index of the IT, you can see that on the daily time frame we can see that there is so it has slipped to the sideways, right? So the momentum, bullish divergence didn't work out. The bullishness is gone. Nifty has turned to sideways. So if you look at that weekly time frame, what we can see here is that there is some divergence of momentum that I had noticed here. So if you look at see here, this is the price is going up, and this price is, the momentum is falling down, right? So this is a bearish momentum divergence which can bring the market at least to this level, right? At least, right? Which means, so if you look at the two major constituents of the Nifty, which is also the major constituents of Nifty IT index, TCS also is having a bearish momentum divergence because the price is going up and the momentum is coming down, right? This is a divergence, bearish divergence, which can bring it down here for TCS potential. Same thing can be seen here in Nifty also, in Infosys also, right? You have that price moving, and then you have the momentum falling. This is bearish divergence. So IT just have to be careful because the bearishness is no longer there. This is on the weekly, not on daily. So it may take time for that crash, but it already seems to have started, right? So that is something about the sector. So let's get back and see the other sectors. Metal is sideways as before. FMCG is gone to sideways. Bullishness is over. None of the momentum bullish divergence failed and didn't work. Auto also is already in the sideways down. Right. Pharma is pharma is also in the sideways. Right. So that's about the sectors. Right. So the IT's bullishness is going. You have to be cautious on that. And all other sectors are actually flat. Right, that's the conclusion. Now let's get into and see what happened in the currency pair today. Currency is bullish here, right? Kind of a spinning top, but it's not on the top, so it's okay. It's kind of taking a support at the previous resistance zone, and then it's a change in polarity. Looks like so. It is also taking a support at in the momentum also, right? And then bouncing, right? If you see the momentum RSI, you can see that it is taking a support at the bullish zones and then bouncing. So it is setting ready to hit at least the 75 once again for sure, right? So that's another bullish day for the moment. This dollar index also, if you see, it is strengthened. It is also taking a support for a change in polarity, for a bounce up, right? It is still in the bullish zones if you see the momentum. And if you see gold, the channel breakout already happened. It did not move much today, but yeah, so overall it is breaking out, looks like, right? If you look at the weekly charts, you can see that it has broken out of the channel and then trying to hit the next upper high level. So it has taken a pause. There seems to be a weak. It's weekly. Let's look at the week was not ended, so let's look at the. Just look at hammer. It's a hammer which shows some bullishness, right? You can pull it further up, right? So US dollar and gold seems to be bullish. Oil is corrected, I think. Brent oil and values, so there's some kind of correction. There is some resistance of the price that you can see at this zone. And the momentum also is resisting. Right? It's not able to go in the bullish. Further increase may not be, maybe arrested for the time being is what you can understand. Global markets seems to be green. Nasdaq is 100 points up. Nasdaq is 40 points up as of now, time of the recording, and 100 points up Dow Jones, and then S&P 500 also in green. So overall, the US market is up and going up. So that's all there is to discuss. Just to summarize, you can see that candlesticks are clearly showing that there is bears are in control. It is getting hit resistance every other day. It is clearly consolidating is what bullish. Consolidating is what the Bollinger Bands tell us. Support and resistance, the major support and major resistance, and the market is moving in between. Momentum divergence, no divergence, momentum is sideways. Trend is sideways, slightly bullish for very short term, for daily basis for the Nifty as of now. Operators analysis also showing the same levels of 15,600, 800, 35,000, that is 34,500. That has been there for the last 2 weeks. Volatility is very low and is spiking up. FIs are selling, DA is kind of buying little. Sectors are all sideways. IT has to be cautious. USD INR rising, gold rising, global markets in green. That's a summary. So yeah, so the actionable would be to just positionally no actionable, like you just have to wait for the market to do whatever it wants to do, either to go up or so. Wait for the action if you're swing or push into this. Now just wait for the breakout or the breakdown to happen. That's all. Intraday, right? Pure price action has to be played with strict stop losses, considering the kind of sudden spikes in the volatility and the sudden price jittery moves that are happening nowadays. Stop losses are must, or hedge positions, like spreads, right? Either way, bullish or bearish spreads or hedged strangles and straddles is all are the only things that has to be done, right? Naked option buying or selling is dangerous. Yeah, so that's all I have for this day. I hope you would have got some points to learn from it, some point to help you plan for uh, creating a trading plan for the next day. Yeah. Thanks for watching. Yeah, once again request you to please share this to your friends and ladies and whoever you think that may need this kind of information to better trade. Please share it to others. This will also help us tremendously to come out with better quality content each time we make videos, right? So please subscribe. Thanks for watching, and happy trading and happy learning.